Hello everyone. Today's video is coming out a bit later than expected, but thanks for showing up and thanks for tuning in. So in today's video, we're going to take a look at the McClellan oscillator and how what indicators are showing bearishness, what's showing bullishness, and maybe we need to look at what the next steps are for the market in terms of strength and weakness. All right, so we're going to take a look at the S&P 500, the NASDAQ, the Russell, the dollar, the bonds, and the VIX. All right, so without further ado, let's get started with the video. All right, so first things first, this is stockcharts.com. This is a chart of the NYMO, the McClellan oscillator ratio adjusted. So this has a pretty decent track record, right? So we're going to take a look at the NYMO, and then after this, we're going to take a look at the NYSI. So what this shows is that so right here, we can see that when the oscillator becomes red, it becomes bearish for the market. So what we can do is the day that it turned red, for example, was on September 1st. So we can coincide and look at what was going on with the S&P 500 on September 1st. Okay, so let's go ahead and do that. All right, let's take a look at September 1st here. And September 1st was the top here at 453. So this gave a really good sell signal, and the NYMO basically became red after this red candle, and now it's continuing to show bearish momentum. Okay, so you could go back in time and just go back in history, like, okay, so for example, August 17th, all right, it became bullish. So what was going on in the market on August 17th? We could just take a look at that together, right? So on August 17th, it was the end of, basically we had this big move to the downside right here. The next day we fell a bit lower, but we bounced. And then that was basically the bottom over the next few days afterward. So it does a pretty good job indicating the tops and the bottoms. So right now, the momentum on the NYMO is bearish. So that is really, really interesting and really important to always take a look at. So we're going to take a look at the NYSI now. All right, so the NYSI is this is the summation index for the McClellan. So this also does a pretty good job. And when the indicator turns red, it's bearish. When it turns black and crosses above, it's bullish. So what we saw was on August 28th, it flipped bullish. But now, if we zoom in here, it just turned red. Okay, so the momentum on both the NYSI and the NYMO are both bearish. And that is interesting, because how bearish can this be? Is this going to end up bouncing? Is the NYMO going to get some sort of a bottom? But purely at the moment, they're both bearish. Also on the MACD, the 12.26.9 MACD, we are trying to cross above and get a bullish crossover on the MACD. But you could see that it's really, really flattening out, and it's becoming really difficult to try to cross above. So let's see. Essentially, these next few days, the market can continue to be bearish, but after CPI data comes out and after options expiration, is the market going to get enough of a bounce to continue to the upside? And this is all based off of next week. So it's going to be interesting to see what happens. So aside from that, we should just be trading based off of the levels on the overall indices. But for now, it's pretty interesting. The NYSI and NYMO are both showing some bearish momentum. Cool. All right, next, let's go ahead and take a look at the S&P 500 and the dollar and the rest of the overall market. All right, first things first, let's zoom out. Let's take a look at the dollar. All right, so the dollar is showing, so the dollar is important because it has an inverse relationship to the market. If the dollar is strong, then the overall market is weak. Okay, very, very simply. Cool. Right now on the Bollinger Band on the dollar, we are hugging the upper level of the Bollinger Band, which is showing that there is a lot more room to go on the dollar before it becomes overextended. So this, it can have a huge green candle today, and then tomorrow it can intraday could go even higher, and then the pullback would happen after that. So there's still potentially more room to the upside on the dollar, and if there's more room on the dollar to the upside, then that would mean that there is more room to fall on the overall market. But yeah, so right now the dollar is still showing some strength. Okay, so there's that for the dollar. It doesn't look good for the market according to the dollar. Okay, next, this is the chart of the S&P 500 on a daily chart, and what we're seeing is this 443 level that I was talking about held perfectly as support. We went long at 443. Our calls are up nicely. We took calls intraday. We day traded at that level of support. I was saying the 442 to 443 level on the S&P, super important support. So I'm holding on to these swings. I want at least 447 to 448. That would be a good opportunity to take some profits and sell. And hopefully that would be the case, but then it would be even better if we come and fill this gap here at 449.17. That would be amazing. But essentially, this is not a shorting opportunity. Like right now, this setup, if you were to try to go short overnight, say for example, the market just closed, right? This is not a shorting opportunity. We came and bounced off of the 38.2% fib absolutely perfectly. And now the next day, after this, meaning tomorrow, we should continue to rise as well, which should be good for our calls. Now, obviously, we are fighting against this momentum, and I do not think that we will break above this high. Okay, so I'm just making this clear. I don't think that we will break above 454. We would be lucky if we broke above 452. It would be lucky if we retested this high. So, because based off of this move, based off of Apple completely dropping, it's not great, but Apple did get a lot of buyers today. A lot of buyers came in on Apple today, on the lows. So it's gonna be interesting, but we're gonna take a look at that. But right now, immediately, this is not a opportunity to short. A better opportunity to short would be let the bulls bounce this up to 447, 448, and then short it up there. So that's what I'm expecting to happen for multiple reasons. Obviously, the NYMO and the NYSI are showing bearishness, and the dollar is still showing some strength. But the reason why I think that we should get some sort of a bounce to these levels of resistance here is the large mega cap multi-trillion-dollar tech companies are still showing some strength and still showing some bullish breath in the market. And that is the only reason at the moment, because the dollar is not doing too good. Actually, the VIX also broke below 1450, but that's not as huge of a reason. The large tech stocks are holding this market together at the moment. And for example, Microsoft basically held really nicely. Amazon held really nicely. Facebook held really nicely. And Google held really nicely. So all of these stocks had a really red day, and either they bounced to green or they closed somewhat flat. So that is still showing a lot of strength for the tech sector at the moment. And one of the biggest problems, if Apple did not do this, so one of the biggest problems is Apple decided to drop this heavily. If Apple didn't do this, and if Apple was still trading above 185, then bears would be done. But the fact that Apple did this gives some hope to bears. Okay, so we need Apple to continue showing some strength. Tomorrow, we need to see if Apple can hold and break above 180 definitively. If it could do that, then there is still bullish hope in the market and things should be good to go. But, you know, we're going to see how things go one step at a time. It would have been spectacular to see, you know, Apple hold strength. Also, Tesla, like, opened really red and opened basically almost turned green. So these large tech stocks are holding the market up, even though the IWM related names and the IWM in general are not doing too well. So you can see today the IWM was the biggest loser. It was down 0.97% compared to the NASDAQ's 0.72% and the S&P's 0.30%. So the IWM took another hit, but now the IWM is at 183, 184 support. The NASDAQ held 370 support, and now it's trading above the 50% fib at 371.60. And the SPY held the 38.2% fib, held 443. So things are at support. Obviously, the momentum is bearish. Things are at support. But if you're a bear, you want this to bounce back to levels of resistance and reshort up there. You don't go short down here. And yeah, we just need to see if the other tech stocks can continue to break out relative to where the SPY and the IWM are. And all eyes are going to be on the large mega cap companies. We need to continue to monitor how Microsoft, Google, Tesla, and Amazon Meta are doing. If they start breaking out, if they continue to break out, then it's really, really difficult to be bearish on the market, in my opinion. That would be a really, really good bullish sign. Even if in the short term things are bearish, that'd be a really, really good sign to just stay bullish on the market. And the other thing that we have to look at is if the dollar just needs to start showing some red. And if the dollar starts showing some red, that'll give extra bounce in the overall market. And then we have to take a look at the bonds. Obviously, like, it's not, the bonds aren't, so we're going to take a look at the bonds, and then after this, the VIX. So right now the bonds aren't doing anything crazy. And we know that the bonds have a more correlated relationship to the market. If the bonds are doing well, then the overall market should also be doing well. But that only takes, that only shows relevance. So if the bonds are bullish, that only happens if it breaks above like multiple important levels of resistance. So if the bonds broke above a major level of resistance, then the bullishness in the bonds would show in the overall market. But right now the bonds are just flat, not really doing too much. But another bullish thing is the VIX. So the VIX closed below 1450, which is nice. It doesn't necessarily mean that, you know, it's automatically bearish for the overall. Like, basically, the VIX is relevant because it has an inverse relationship to the market. If the VIX is doing well, then the overall market is not doing well. So basically, the fact that it failed to hold above levels of resistance at 1450, really, really good. But pragmatically, we can see that the MACD on the VIX just crossed above, and when that's the case, it's bullish momentum. So for the next 1 to 2 days on the VIX, it is going to be bullish to neutral in terms of the momentum. And if that's the case and it continues to rise off of this, then it's bearish for the market. So there's a few reasons to be bearish on the market. The McClellan oscillators are showing bearishness. The dollar is showing some strength. The VIX is, you know, looking to cross above and show some bullish momentum on the VIX. But in my opinion, all of that really just gets evened out because the equities market is at levels of support and there's so much strength in the tech stocks. So yeah, with that being said, I hope you guys, honestly, there's just really not much else to look at. You know, I hope you guys enjoyed today's video, and yeah, we just have to take a look at we just have to take it one day at a time now. Ideally 447, 448 is that level that we get to take some profits at. That'd be really, really good, but we'll see how that plays out. But aside from that, I'll be here bright and early tomorrow morning. We're gonna day trade and we're gonna kill it as always. And if you guys don't already know, I started posting daily videos in on YouTube as well, going in depth about the reasons why I take certain trades. So you guys could go ahead and check that out as well. And yeah, man, we win every day with the day trades, and things are working out really well. So definitely check that out if you want to add day trading to your repertoire as well. And yeah, man, love you guys. Take care. Make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. All right. Thank you. Take care.